I'm Doris. I'm here to share with you about market updates. Today is the start of July, and Nasdaq 100 index has received its best gain in half a year the upper 2023, and the surging tech stocks have raised valuation concerns. Halfway through 2023, tech giants have clearly made a comeback of last year's big decline. The mega cap market has recovered nearly $5 trillion, with Nasdaq 100 posting its best first half performance in history. The AI technology came just when people didn't know what else they were pushing in, and they seem capable of capitalizing that huge boost. All roads are back to growth, so many people are optimistic about the second half of the year. Optimists believe that AI represents a huge new market that is expected to maintain high growth for many years. At the same time, investors continued to be attracted to the qualified factors that big techs have, including strong balance sheet, durable revenue stream, and strong competitive positions. Nasdaq 100 rose 1.6% on Friday, and Apple rose 2.3%, becoming the first company in history to tolerate more than $3 trillion of its worth. According to the study, the tech sector is expected to lag behind the S&P 500 in revenue this year, with faster growth in 2024 and 2025. Earning trends are expected to be similar. Nasdaq rose 39% in the half of the year, the best half-year performance on record. However, the index is still about 10% below the closing record in November 2021. Almost all of its gains were made possible by supercap stocks such as Apple and Microsoft, which are not only the largest constituents of the index, but also the top gainers. Apple became the first company in history to exceed $3 trillion in market capitalization. NVIDIA, the sector's exemplary model, soared 189% to become the first chipmaker to reach $1 trillion in the market capitalization. The company became a hot stock due to the computer its processors use to support AI applications. Bloomberg's analysis of historical data shows that Nasdaq 100's strength so far this year suggests that the rest of 2023 may also perform well. The index averaged about 14% in the second half of the year, when it rose at least 10% in the first half of the year. Although it narrowed to 8.3% in the second half of the year, when it rose more than 20% in the first half of the year. The rally has raised concern about valuations. The Nasdaq 100 has a forward price-to-earning ratio of nearly 26 times, higher than its 10-year average of 21 times. Apple, Microsoft, and NVIDIA are significantly above their average, although still below their pandemic peaks. As a result, analysts' confidence has weakened. Apple's composite rating, an indicator that aggregates the ratio of buy, hold, and sell ratings, is near its lowest level since November 2020, while Microsoft's composite rating is at its lowest level since mid-2019. This week was defeated by UBS and Sanford C. after Bernstein downgraded Google's parent company, Alphabet Inc., as its lowest composite rating since April 2018. Most analysts continue to recommend very large cap stocks. On Thursday, Citi began covering Apple, rating it a buy and expecting Apple stock to rise about 30%. The strength of tech stocks means that the so-called fear index has been moving lower. The CBOE Nasdaq's volatility index is down nearly a third from its March high, and also below its long-term average. However, in a sign that investors may be preparing for a relative turmoil ahead, VIX, a measure of expected volatility in the S&P 500 based on option pricing, fell even more, pushing the ratio of tech stocks to the broader market volatility index to its highest since 2018. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.